Hello, good morning everyone. As you know, we are doing chapter 7 from part 1, dissolution of partnership form, 12th commerce. And we are going to continue with the same chapter. In the previous lecture, we have solved a sum from the exercise, which is question 5. We have had 2 lectures for solving this question. In the first lecture, we have understood about the first 5 transactions. And in the next lecture for the same, we have completed the sum. Alright? So, today, we are going to start with the next sum from exercise. This is the third lecture related to exercise. The previous 2 lectures from exercise consist of question 5, in which the first lecture of exercise is about question 5, the 5 transactions. The first 5 transactions, and lecture 2 of exercise consists of the remaining transactions, remaining questions from sum number 5. And today be the third lecture from exercise. We are going to start with question 6, which is past journal entries for the following transactions when realization account is prepared at the time of dissolution. Yes, we are supposed to write down the journal entries at the time of dissolution for the preparation of realization account. This does not mean that we are supposed to prepare a realization account. We are just supposed to write down the journal entries with same regard. Okay? Fine then. This question is given in exercise chapter 7 in your textbook. Once you study this lecture and later if you want to revise, then the sum is given in the textbook and is also presented on your screen. Let us see which is the first transaction with this. It says book value of machine is rupees 50,000, which is taken over by partner Darshan for rupees 55,000. Understand? Book value. Book value is the one which is presented in the balance sheet, which is given in the balance sheet. Okay? So at the time of dissolution, the value of machine, the book value, is of rupees 50,000 and it is taken over by partner Darshan for rupees 55,000. Let us quickly revise what happens during the time of dissolution. At the time of dissolution, the very first thing is the realization of assets for payment of all liabilities. The journal entries that we have understood consists of how to deal with every item disclosed in the balance sheet at the time of dissolution, of which the first concept was reserves and credit balance of profit and loss account. Secondly, it was the accounts of assets are closed and transferred to realization account. Yes? Then it was about debit balance of profit and loss account. Then, when assets are sold or assets are taken over by a partner. So that topic is to be applied here when an asset is taken over by the partner and when the assets are closed. So book value of machine is 50,000. Always remember one thing. Whenever you are closing accounts of assets and liabilities, yes, you always have to close them at its book value. Book value is the one value at the time of dissolution. Alright? And then you have to check whether the realizable value is mentioned or it is instructed that the book value itself is realized. Okay? So with this, let us begin solving this sum. It says realization account debit 50,000 to machine account 50,000. Being asset account is closed, being machine account, you can also write this way. I repeat, being machine account is closed and transferred to realization account. Now what is the usual process? An asset account is closed and then the asset is sold. It means the value of an asset is realized. Alright? But here they say that the asset has been taken over by a partner. So the journal entry is, and who is the partner? It is Darshan. Darshan's capital account debit to realization account. It is taken over for 55,000. Yes? And its book value is 50,000. Closing entry is always with the book value. The next journal entry for realization or asset taken over by partner is at a given value. The given value can even be the book value in some cases. Alright? Next. Okay, it says partner Bimal has accepted to pay bills payable of rupees 15,000. Bimal is a partner. Bills payable is a liability. Now usually the accounts of liabilities are closed and all the liabilities are paid. This is the usual process. So bills payable is a liability of 15,000 rupees. The same is closed and transferred to realization account. The first journal entry says that bills payable, the journal entry for closing liabilities account is liabilities account debit to realization account. And which is the liability here? Bills payable. So bills payable account debit 15,000 to realization account. The closing entry for a liability. Now who accepts to pay this liability? Bimal. Alright? So realization account debit 15,000 to Bimal's capital account 15,000. Usually what is the journal entry for payment of a liability? It is realization account debit to cash and bank account. Yes, this is the usual journal entry for the payment of liability. But here, the partner has accepted to pay. So, instead of cash and bank here, it is written to Bimal's capital account. Alright? Okay then. I hope you are clear with the transaction number 1 and transaction number 2. First transaction is about closing an asset and the partner has taken over the asset. Second is about The liability has been closed and the liability will be paid by the partner. Okay, so let us see which is the third transaction in the given sum. Past bad debts was written off rupees 11,000, out of which rupees 6,000 are recovered. First of all, understand what is the journal entry for writing off bad debts. Bad debts is a loss. So the journal entry that you might have written in the past year definitely must be bad debts account debit to debtors. But it is about past year. And right now, out of the bad debt of 11,000 in the past, at present 6,000 are recovered. So was there any expectation of this recovery? No. I have closed that account with 11,000 in the past year with the mindset that I am not going to recover this. And now that it is realized, the amount is realized. So whenever an amount is realized, the common journal entry for that is cash bank account debit to realization account. 6,000. All right? Okay. So if you have any sort of doubt in your mind that for this transaction, ma'am, there is only one journal entry and why not two, then let me clarify that this is not an asset nor this is a liability. This is just bad debts that too written off in past. Right now the amount is realized. So whenever anything is realized, the journal entry is cash and bank account debit 6,000 to realization account. So there does not arise any sort of question to close down this account and then writing down the journal entry for realization. Okay? Make sure you are doing illustrations along with the daily lectures that are delivered to you once you study them, and then I expect that you have been doing illustrations too, which are really important, isn't it? Okay, so let us continue. All right. Question 4, transaction number 4 in the question 6 that we are doing. It says book value of sundry assets is rupees 2,70,000 and realized rupees 2,27,000. Book value of an asset 2,70,000. So realizable value, it says 2,27,000. Definitely the two journal entries you are supposed to write here. One for closing down an asset and the other for its realization. Whenever you close down an asset, the account of any asset, the book value is to be considered, and at the time of realization, the realizable value is to be considered. Yes? Okay then. It says realization account debit 2,70,000 to sundry assets account 2,70,000 be the first journal entry for closing down an asset. You know this concept very well. It has been taught to you during journal entries, during the concept of journal entries, which says how to close an asset account, and also I have repeated this again and again in each and every single transaction, also in the very first transaction of this sum. Yes? So, the first journal entry for closing the accounts of sundry assets: realization account debit 2,70,000 to sundry assets account 2,70,000. Then it says cash and bank account debit 2,27,000 to realization account 2,27,000. This is the realizable value. This is the book value. So being sundry assets account closed and transferred to realization account, and second journal entry, cash and bank account debit to realization account 2,27,000, clearly instructed here that assets have realized 2,27,000 rupees. The sum is extremely simple even in comparison with question 5, which consists of almost 12 transactions. Yes, this is quite simple sum. Entirely it is based on the journal entries. So please go through all the journal entries mentioned in your textbook, chapter 7, part 1, and also have been taught to you in the previous lectures of the same chapter, the ongoing chapter. Alright? Okay. So, next transaction. Yes, it says sundry creditors rupees 60,000 paid at 25% discount. First of all, what are creditors? Creditors, of course, is a liability, and the liability here is of rupees 60,000, and at the time of dissolution the payment of this liability is at 25% discount. Alright, so first of all, while closing the account of a liability, the journal entry will be sundry creditors account debit 60,000, sundry creditors account debit 60,000 to realization account 60,000. Okay, this is the book value. I repeat, always while closing the accounts of an asset, closing the account of a liability, 60,000, the book value is to be considered. The book value here is 60,000. Yes? Okay. Then the payment, obviously, liabilities, all the liabilities are to be paid at the time of dissolution, after the realization of assets. The assets accounts are closed, assets are sold or taken over by partners. Whatever amount is realized is utilized for the payment of liabilities after the payment of dissolution expense. Okay? Alright then. Hope you are clear with this journal entry. Realization account debit 45,000 to cash and bank account. Of course, this is the journal entry for payment of liability at 25% discount. What is 25% for 60,000? It is 15,000. Okay, which has been deducted from 60,000, and the value of payment is 45,000 thus. Let us see the next transaction. It says unrecorded tax paid rupees 5,000. Unrecorded tax, unrecorded liability is paid, which is of rupees 5,000. Now you know well what is the journal entry for payment of a liability. Yes. What is the journal entry for payment of liability? Realization account debit 5,000 to cash and bank account 5,000 again. The question that arises in your mind here that ma'am, why this liability has not been closed? Why it is paid directly? Because it is unrecorded. The one which is not recorded, the one which does not appear cannot be closed. It is directly paid. This type of transaction we have solved in question 5 even, and also in the journal entries that we were understanding. The journal entries related to the preparation of realization account. The journal entry for payment of an unrecorded liability. Which is the unrecorded liability here? It is tax. And it is paid at the time of dissolution. So the journal entry is this. And it says being unrecorded tax paid rupees 5,000 narration. Alright, okay, the next transaction, it says dissolution expense paid rupees 5,000. Dissolution expense, the very first payment that you need to pay at the time of dissolution of the firm. Yes? So this is again the payment. The journal entry for the payment says realization account debit 5,000 to cash and bank account 5,000 again. The journal entry for payment of a liability, for payment of any expense is always this. Okay? So dissolution expense, again this is an expense. So there is no question of closing it down because it is not an asset, not even a liability. Yeah? So realization account debit 5,000 to cash and bank account 5,000. B, the journal entry for the payment of dissolution expense. This journal entry again we have understood while understanding the concept of journal entries of this chapter in previous lectures. Okay? Being dissolution expense paid rupees 5,000. This is how you write a narration. If you will just read it once in illustrations, then you will ultimately get to know how to write narration. And I think you already know this, how to write narration, from the very beginning of 11th standard. Not the very beginning, but at least from chapter of journal. Yes, that what actually narration is. Whatever the transaction is about and whatever you have written about that transaction, the journal entry that you have written about that particular transaction, you have to narrate it in brief below the journal entry and in bracket is what narration is all about. Yes, so you should be able to do this much. Alright, the next transaction and the last transaction of this sum, it says goodwill is not disclosed in the books. Okay, firstly, goodwill is an asset. This asset has not been disclosed in the books. So the very first thing that comes to my mind is that if it is not disclosed in the books, then it cannot be closed and transferred to realization account. Just the way you don't write journal entry for unrecorded liability, closing down the unrecorded liability, unrecorded asset. Yes? Then it says, but rupees 20,000 realized from sale of it at the time of dissolution. So, the journal entry for realization of an asset is cash and bank account debit to realization account. This journal entry is for realization of an asset, realization of assets, I mean. So, how much is realized from goodwill? 20,000. So, cash and bank account debit 20,000 to realization account 20,000. Clear? Okay. So, here we end with question number 6 from your exercise. And as I said, your exam will have 3-mark questions, short questions which can be theory, either a sum, and the sum could be that you will be provided with any of this type of 3 transactions that we have done. And you are supposed to write down the journal entries for the same with narration. So this is how your sum is going to be. Yeah? So let us check what is your homework for today. It is that you are supposed to finish sum number 6 that we have done in today's lecture from exercise in your fair books. Alright? So here we end our session for today. We'll see you all soon in the next session soon. That probably will be the last lecture regarding chapter 7, and thereafter we are going to continue. We are going to begin with the new chapter from the subject accountancy. And I have also mentioned in the previous lecture that you should purchase part 2 of accounts. It is obviously available in the stores now, so that you don't face any difficulty in case if I'm willing to start any of the chapter from part 2. Yes? This was the 3rd lecture from exercise. We'll have one more lecture of chapter 7 and then we'll finish, we are completely done with chapter 7. Once we will take one more lecture and then we'll be completely done. And thereafter we are going to start with the new chapter. But please make sure that you will have your textbook of part 2 with you. And also part 1 of course. Yes, so we'll see you all soon in the next lecture. Till then, please stay home. Do not move out unnecessarily. Stay home and study these lectures well, practice well, and stay safe.